What would you rather have in your investment portfolio in 2036? One could make you a fortune overnight. The other might make you rich slowly but surely. Which do you choose? A sealed Pokémon base set booster box worth 6 figures? Or a diversified stock market portfolio, the tried and true way to build generational wealth? You've heard stories about old Pokémon boxes now being worth tens of thousands. Meanwhile, the stock market has helped countless people retire early. But here's the twist. Some Pokémon boxes have outperformed the stock market, yes, the same market Warren Buffett swears by. Pokémon cards have significantly outperformed the stock market in recent history, and sealed boxes might just be the secret hidden gem of the collectibles world. Today we're answering the million-dollar question. Over the next 10 years, sealed Pokémon booster boxes or the stock market, which one will grow more? Let's break it down with real facts, real numbers, and a side-by-side comparison you won't want to miss. What are sealed Pokémon boxes, and why do people invest? Imagine buying something as a kid and watching it grow into a six-figure asset decades later. That's the power of sealed Pokémon boxes. First, let's define what we're talking about. A sealed Pokémon booster box contains multiple packs of Pokémon cards that have never been opened. That means the cards inside remain untouched, and in the collectibles world, sealed equals scarcity. Here's how sealed Pokémon box values have evolved. Vintage first edition base set booster boxes originally sold for about $100 at retail, but now in sealed condition, some trade for 6 figures. Modern sealed boxes like Sword and Shield Evolving Skies launched around $140 and by 2025 were trading for $700 plus. That's the power of controlled supply and nostalgia. Right now, sealed Pokémon boxes are being treated by some collectors and investors as alternative assets, meaning they behave differently from stocks, bonds, or real estate. But can they beat the stock market? That's where things get interesting. Spoiler alert, the answer may surprise even seasoned investors. How the stock market actually performs, a baseline. Let's talk about the stock market so we have something to compare with sealed boxes. Historically, the S&P 500, the broad index of America's biggest companies, has delivered steady returns over decades. Over the past 20 years, the S&P 500 has averaged around 7 to 10% annualized returns after inflation. Steady, predictable, boring? Maybe. But consistent wealth is built this way. That means if you invested $10,000 in an S&P 500 index fund 20 years ago, you'd likely have $38,000 to $40,000 today just from the market doing what it normally does. But there's a key thing to remember. The stock market doesn't give you surprises every year. It grows steadily with ups and downs. But historically rewarding consistent patience. This steady growth is why financial planners recommend stocks for retirement saving and long-term wealth building. Now let's put Pokémon sealed boxes on that same playing field. Pokémon sealed boxes, real growth numbers. Here's where things get shocking. Ready for numbers that make the stock market look like small change? A sealed Pokémon base set box bought for $100 decades ago? Now worth orders of magnitude more. And it's not just vintage, sealed Sword and Shield era booster boxes have soared as much as 1,432% to 2,027% over a few years from original prices. Examples of sealed products appreciating: Evolving Skies is 2021, from $143 retail to $2,000 plus in 2025, 2,000% plus growth. Lost Origin, 2022, rose to $899, 629% of retail. Brilliant Stars, 2022, around 439% of retail. These aren't minor increases, we're talking multi-fold growth that dwarfs typical stock returns in the same time frame. And the craziest part? Some modern boxes did this in just 3 to 4 years, not decades. And that's just sealed products, not counting rare singles like a PSA 10 Pikachu Illustrator selling for millions. So why do sealed boxes grow so fast? Scarcity. Once out of print, sealed products become harder to find. Demand. Adult collectors who grew up in the 90s now have adult money. Alternative investment demand. People seeking returns beyond stocks and bonds are buying in. But before you start sealing every box you find in your attic, there's an important comparison to make. Stock market versus sealed boxes. Direct comparison. Let's put the two side by side. Stock market versus sealed Pokémon boxes and compare growth scenarios over 10 years. Stock market S&P 500. Historical average annual return 7 to 10%. Compounded over 10 years, roughly 100 to 160% total growth. Liquidity high, easy to buy or sell anytime. Low risk profile, medium risk with decades proven resilience. Sealed Pokémon boxes, historical sealed returns. Some vintage boxes saw 1,000% plus over decades. Modern sealed products, some sets have gained 400 to 2,000% plus in 3 to 4 years. Liquidity lower, selling sealed requires niche markets and patience. Risk high, wildly volatile and driven by collector demand, not earnings. So how do these compare? In some cases, sealed products have far outpaced the S&P 500, while some analyses found Pokémon Collectibles delivering 3,821% returns compared to the S&P 500's 483%. Over roughly 2 decades, that means sealed Pokémon returns were almost 8 times the S&P 500 returns over long-time horizons in certain analyses. But there's a catch. The risks you can't ignore. While sealed boxes can generate massive returns, the risks are very real. 1. Volatility. Unlike the stock market, which has regulatory oversight and predictable growth patterns, Pokémon sealed box prices fluctuate based on collector trends, nostalgia waves, and pop culture hype. Prices can stall, dip, or explode unpredictably. 2. Liquidity. You can sell an S&P 500 ETF in seconds, but sealed booster boxes require finding the right buyer. That takes time and sometimes costs fees. 3. Condition matters. A box with storage damage, bent edges, moisture issues, or sun exposure can tank in value. But a sealed product needs perfect storage or it's essentially worthless as an investment. 4. Speculative nature. Most financial advisors will tell you sealed boxes are a speculative asset, like fine art or vintage cars, and should only be a small portion of your overall wealth strategy. Even experts recommend limiting high-risk collectibles to a small piece of your overall portfolio. So who wins over 10 years? Let's give the honest verdict. If you're a conservative investor, the stock market wins. Why? Because it grows steadily, pays dividends with reinvestment, and has reliable historical returns versus unpredictable collectible markets. If you're a long-term speculator, sealed Pokémon boxes can win, but only if you pick the right sets, hold long, and don't panic at dips. Some sealed boxes have achieved multiple times the S&P's returns in shorter periods, especially vintage products. The best strategy? Diversify. History shows that Pokémon sealed boxes can outperform the stock market, but they're volatile and unpredictable. A balanced portfolio that includes traditional stocks for stability and sealed collectibles as speculative upside might capture the best of both worlds. So, Pokémon sealed boxes versus the stock market, who wins over the next decade? If you want reliability and long-term financial growth, the stock market still rules. And if you're willing to take risk and pick wisely, sealed Pokémon boxes have the potential to outperform the market, sometimes dramatically. The real magic might be in blending both, stocks for stability, sealed boxes for upside. Now I want to hear from you. Would you invest in sealed Pokémon cards? Or would you stick with plain old index funds? Comment below. And if you want more deep dive comparisons like this, hitting real data with real takeaways, smash that like, subscribe. And turn on notifications, because next time at Chapiki, we're comparing Pokémon cards versus real estate, and the numbers might surprise you there too.